Yes, now it's
Now,
over. Okay, I think we start. It's already 7:06. Can we start now?
Yep.
yes, good to go.
Okay. Good evening, all. Every job is a self-portrait of the person who did it. Autograph your work with excellence. In today's fast-paced environment, the role of the CFO is extremely fluid. One day, the CFO might be developing a compensation plan for employees, then the next day taking their bankers on a tour of facilities. Consequently, to be a successful CFO, you must be a more multifunctional executive. Focus on where you want to go, not on what you fear. CFOs face never-ending pressure to cut costs, grow revenue, and ensure control. In this pandemic, what do we expect from a CFO? A strategist or a catalyst? Now let me hear from our expert speakers, Mr. Neeraj and Mr. Nitin. Mr. Devesh will be the moderator of today's session and he will also be adding in as a speaker. Before I invite these speakers, may I request Pratima to be the profile of the speakers?
Thank you, Kala. My pleasure to introduce today's member speakers. I'll start with Neeraj. Neeraj Singhal is a senior finance professional with more than 22 years of experience in the areas of audit, financial services, and travel industry. He has worked with various multinational companies such as KPMG and American Express in various roles and geographies across Asia. Presently, he is the CFO Asia Pacific for a large corporate travel group, BCD Travels, covering 18 countries across Asia. Nitin Jain, he is also a senior finance professional with more than 20 years of experience, which includes a strong association with GE Group in various capacities such as commercial, liquidity, risk management, and process transformation. He has also served as the commercial CFO for Steam Power in GE Group. He has recently co-founded a startup, Grow Asia, and the Smart Bridge, which are focused in smart and project-based learnings through artificial intelligence, blockchain, and robotics. So welcome Nitin and Neeraj, and I'll give a quick introduction of Devesh. We all know Devesh. He is also a finance professional with 15 years of experience. He has worked with KPMG and he's worked with a French multinational corporation, Socomec. Did I say that right, Devesh?
Yep.
Okay. So in India, he was the head of finance for their India business, and now he's the financial controller looking after the Asia Pacific business across more than 10 countries in the region. So Devesh, over to you and welcome all.
Thank you, Kala, and thank you, Pratima, for the lovely introduction for the topic and for all of us. I would start by welcoming the members and the whole group, and also I would take the opportunity to wish all a happy festive season, a part of which has already gone through, and we are going through that in November. So I would start with where we were at the beginning of October with Mr. Pai. Mr. Pai talked about economy. So I will start with talking about the economy. We all know that COVID is far from getting over. The graph is also yet to bend, and the economic graph is bending too much. But yes, as you can see in the right side of the table, there is a lot of optimism. The world economy, the advanced economy, and the emerging economies also are keen to revive in 2021. So that's the general context, what we heard from Mr. Pai as well in the beginning of October. So since this is a session for the CFO role of finance and CFOs, we have covered some external surveys and we tried to check the mood of CFO and the finance community across the world. And you will see what they said. They also reflect a similar mood. The companies they work with has been hard hit. you will see at the bottom of survey that more than 50% have been hit in terms of top line and bottom line by more than 30%. So that's huge. There has been dent on the cash as well by more than 50%. So globally, the CFO surveys across the world covering Asia, North America, and Europe is reflecting the similar situation. But if I come to the topic of the day, there is optimism in the CFO community as well. From April to now, more than 50% are optimistic about the next year. Yet they are talking about the different shapes of recovery from V, W, U to L. But more importantly, what is keen is that they have already identified or they have implemented some actions which are mostly revolving around working capital optimization, liquidity, and cash. And what's interesting to see is that normally the CFO and finance community is being considered as a risk officer, a caretaker of the organization, of the numbers. But they have, of late in the last decade, the finance community has been talking about the organization in general. That's more a strategic role of the finance community. And that you will see in the right side of the table that more than 90% they are talking about the organizational change. They feel they have a role to play in the organizational change. They talk about digital transformation, not only in finance, but in the whole organization in general. And they are keen and they are a part of this transformation of organization and digitization in general as well. There are a few other surveys of, you'll see the PwC CFO survey. It says again, the liquidity, working capital are one of the big concerns. And for LMS, which is one of the credit risk companies, the credit insurance companies in Asia and Europe, they also say that the payment delays and working capital are one of the key priorities for the whole finance community. So in general, if I conclude this, the CFO community has a mood where they say there is a lot of optimism in the next year. And they say that cash liquidity, working capital, payment risk, and the change in organization is a much needed change, which has to be really emphasized and prioritized in the coming months and in the coming years. So this is a survey we did, we covered for most of the big consultants, but we covered a survey among our finance community in ICI Singapore as well. And you will see in the coming slide that the mood of and the reflection of the survey within our team was something quite similar to what we have been seeing and what we had got a reflection from the external survey of the reputed consultancy companies of the world. Just to give a background of our participants so that you can know the group better as well, there were 50 participants who participated in the survey. Most of which, more than half of which were belonging to small, medium enterprises or startups. There was a fair representation, as you can see, in 32% and 14% in the mid-size and large size as well. In terms of the role in organization, they are fairly, more than half of them are in the mid-size, being a controller or finance manager. And some of them also are on the senior management and the executive level as well. So it gives quite a fair representation in terms of the size of the companies and also the roles of the finance community we have for our members in Singapore. Just taking ahead, the key priorities area the group has given and reflected to us is pretty similar to what we have seen in terms of the reflection from the survey of Boston Consultancy, LMS, and PwC. You will see cash and liquidity is clearly one of the key challenges during and post pandemic, followed by, of course, risk management, business model, and budgeting forecasting. So the idea, and just to set the expectation of the group together for the next 1 hour, the idea of all of us will be to cover these key topics, not to really impart any technical training to all of us, but to share practical experiences of what's really going on these aspects of the finance actions. What are the key ground challenges in specific industries the members are facing, and what are the key areas which we can really take few actions, and the takeaways which probably the members can take and introspect themselves, that maybe if they have not really looked on one or two areas which has been discussed, which can be implemented in their organization. So having said this, I will start with the cash liquidity, which is clearly by far the most critical area. Cash and liquidity, as we said always, cash is king, and this is much more relevant than ever today. Uh, it's We have seen that the organizations can be very solid in terms of the business model, top line and bottom line, but if they're not able to preserve their cash and and they have an inefficient working capital cycle, they can really go bust at this time. And there are a few examples on that, even in spite of the strong business model, they have a difficulty to survive. So I'll go to Neeraj. Neeraj, what can you please share? What are the liquidity challenges and the cash challenges the industry in general today are facing, and your organization being the most hard hit, being in the travel industry? We know, last 1 year has been without travel. There is a lot of uncertainty going forward in the next 6 months about what is going to happen. So how do you perceive those challenges, and what are the specific steps your organizations are taking? Please share that with the group. Over to you, Neeraj.
Thank you. Thank you, Devesh, and good evening, everyone. So I'm very excited to be here today. As Devesh has mentioned that this is not a very highly technical area, but this is something that we need to be sharing. And these are sharing and learning sessions. So I would be looking forward to sharing some of the things that we are doing in our organizations and what we are hearing and seeing happening across the industry. So we're not surprised, Devesh, that cash and liquidity management is coming as one of the top focus areas. Now, in these troubled times, many industries, especially ones in retail, aviation, hospitality, travel, and tourism, are facing huge liquidity challenges, right? So let's look at where these pressures are coming from. So on the supplier side, companies are looking to have stronger liquidity support from critical suppliers, but that is not available in most of the cases due to obvious reasons because of supply chain disruptions, and they're also in a similar situation as our companies are in. Then to look at the financing side of things, banks have become very cautious, and then there is a limited financing support that is coming from traditional channels. In terms of debt, a lot of companies were heavily leveraged even during pre-COVID times. And like from the travel industry, we know that some of our competitors are also heavily leveraged, and they are now finding it difficult to service those debt obligations. So, and we have seen that many companies are folding up because they are not just able to meet their debt obligations. On the customer side, which is quite obvious, what we are facing is the delayed payments and some of the default risk which is there from the customers. Now, that has put us in a very tricky situation as well, as to not only from the existing customers where there's a risk of default, there's a risk of delayed payments, and then also acquiring new customers, because it is very hard to do the credit worthiness check and a lot of KYC reviews that we do. So again, this has put up a lot of challenges. And then last is the uncertainty, right? So we are living in the times of great uncertainty, and that is creating huge challenges for all of us. Now, these are all the challenges, right? Now the question is, what can be done, right? So let's be realistic that as a finance professionals or as a finance community, we don't have a magic wand where we can just make these challenges go away. We need to, but what we can certainly do is to take decisive actions that can help us to minimize the impact of negative impact of the liquidity and help navigate through these troubled times. Now, and that's where Kala also said in the beginning, like as the whether CFOs are strategists or catalysts. So I can use another term, right? That we are like a pilot in the cockpit, right? Navigating rough headwinds, right? So so let's look at. So what we have done, as Devesh said, that we have rolled out the survey in our finance community in Singapore. There is, I was surprised to see the overwhelming response. So 50 responses were there. And so what we have asked our members that how they're responding to various liquidity pressures. So 68%, so that's the bottom, so the pie chart, which is there in the bottom. 68% of respondents have performed the liquidity stress test. So this is to ensure that there is enough liquidity for sailing through the crisis in the worst possible business scenarios. Then we have asked deliberately the question around the cash flow forecast, because we consider this as one of the important tools to manage the cash and liquidity requirement of the companies. So from the survey, we can see very clearly that our members are feeling the same way, where forecast frequency has clearly shifted to short cycles from monthly to weekly or daily, right? So we can see in the pre-COVID environment, only 48% of respondents were doing weekly or daily cash flow forecast, which now has increased to 76%, right? So all of us are recognizing the need to have some sort of a crystal ball and be able to project the liquidity requirement. Looking at like 3 months ahead or 13 weeks of forecast are very popular. So that's what we are looking to do. So with this background, let me move to certain actions that we can take or we can fine tune to address these challenges. So Devesh said in his address that cash is king, right? So COVID has clearly demonstrated that cash is undisputed king, right? So cash was always the king, but in good times, not as much focus we have put, but due to COVID, this has become one of the focal point and require a delicate management. So we as finance professionals or CFOs need to look at this topic not only from the short-term point of view, but also looking at how we can manage it parallelly for mid to long-term perspective. So starting from the first step that we need to be taking is to ensure that how we can reduce the cash burn rate, right, and strengthen the cash position. And these are some of the things that we are also doing. The way you asked me that what we are doing in our company from the travel perspective as well. But I'm saying this in general are some of the steps I think which all of us can take, right? Which to start with can be very simple, and then we can look to how we can automate and how we can make it more sophisticated. So first call to action can be very simple. Locate all available cash throughout the company, whether it is a free cash or a trapped cash. So all of you, I think most of you would be knowing what trapped cash is, that cash which is not freely available and which is stuck, and whether in the securities or in bank guarantees, etc. So next to it is looking at the ways how you can free up the trapped cash, right? So, and that's what we are also doing. We are looking at, because we don't have that much business volumes, and we have put up financial securities and bank guarantees with our airline regulators, etc. So we are reviewing in each market what is the optimal level of guarantees and securities we need to keep. So this is to free up the trapped cash and strengthen our banking facilities. Another call to action is, again, that is very simple, sounds simple, but then which is to consolidate and minimize the number of banks. So we need to be lean and nimble and look for various cash pooling solutions offered by a lot of banks, right? So if your cash position is scattered across different banks and you're not looking at cash pooling solutions, so then you cannot efficiently deploy the cash wherever it is required. So I think that is something which you can look to adopt to strengthen the cash position. And then there are like traditional and there are like normal other ways to strengthen your cash position, which are like medium to longer term, looking at controlling or stopping your discretionary spending on marketing, employee benefits, hiring fees, etc. So these are some of the areas which everyone target. But just to reiterate that these are the areas where we need to put brake on. And then simultaneously look at both from the medium to long-term perspective as to what sort of a restructuring actions you need to take. So some of the one of the topic of discussion is like we are having this Zoom call and then work from home practices where we have not gone to offices, or most of us have not gone to offices for a very long time now. And then hence the requirement of real estate and then the physical office space that we have. So we are reviewing that cautiously in each market that we operate in Asia Pacific and across the globe. We are looking at how we can make our workforce very flexible. So these are some of the actions that we are taking to strengthen, to reduce the cash burn rate and strengthen the cash position. Moving on, as our members have also said that cash flow forecast practices, right? So there is a need to increase that process and to put more rigor and governance, right? So I think earlier we have not put much focus. We used to have the cash flow forecast process, but now we have modified our workflows where we are doing the 13-week forecasting, taking into account COVID realities. Now, additionally, what we have done is we have put in more scrutiny and rigor reviews at the local and the regional level, where we are challenging the assumptions made by our finance teams, right? So, because by nature, we are all very conservative when it comes to collections and put the very conservative view. And then in terms of our payments, we kind of look at payments happening in a regular manner. So, so we need to put checks and balances in place to make sure that our cash flow forecast reflect the realities, and we are able to use it as an effective tool for liquidity management purposes. Not only that, we need to be building the scenarios, right? So we need to build the risks and opportunity elements in our cash flow forecast, right? As to various scenarios, how it would look like, cash position, cash requirement. So that becomes again very critical, that we need to have scenarios of business recovery, right? So now in terms of I think some of the medium to longer term solutions on cash flow forecast, it can be done on spreadsheets. You can look to automate. There are cash flow forecast tools which are available, which can be very efficient in terms of for you to manage your forecasting process. And then also parallelly, you can evaluate, and that's what we are also evaluating, is robust treasury management solution to make the entire process more efficient and deploy the cash, and where it can be integrated into our ERPs, and where we can streamline the processes. Moving on to the customers and suppliers, right? So here, what we are doing, and also I think this is a common thing, that we need to be in these troubled times, we should be looking at our customer contracts and see where we can go back to customers and invoke certain clauses to improve the commercials and the our cash flows. Next to it is on the customer side of things, we need to be, though we do it in terms of when we review our receivables and overdue receivables, but at this time, at least in our organization, we have made this as #1 priority area for all the teams, for our commercial teams, for our client management teams, where we have increased the awareness and with the increased heightened communication and the push to boost the collection effort, right? So So we are saying that we need to be on top of our collection efforts. Then in terms of our suppliers, when we look at, we are negotiating or we have negotiated with our vendors, like in our case, next to the operational cost that we have cost of real estate rentals and the technology costs. So we have negotiated with negotiated to defer the rent or to have the longer payment cycle. And similarly with vendors, we have negotiated the longer payment cycle to have the more liquidity. Then next to it is we need to look at what are some of the external financing sources which are available, which is maybe in the form of government grants, right? And then look at, because each country, what we are finding is very different, and so we are taking advantage or making use of various government grants and the loan facilities which are available. So with the coordinated effort from our bankers, we are tapping onto these government grants to boost the liquidity situation. So to summarize, we need to be, I think the crux here is that we need to be proactive and decisive in our actions, rally the entire organization through increased communication and engagement for various actions, and improve the timeliness and accuracy of forecasting process, whether you're doing it manually or whether you're doing it through the automated forecasting tools or treasury management solutions, and then look for additional financing sources. So that's the crux of some of the actions that we need to take and improve the liquidity.
Thank you. Thank you, Neeraj, for the summary of this topic, covering the challenges and also how specifically you're taking the actions to address the topic. As you said, it might look quite general, but there are some topics which I would like to highlight from your summary. Is that we see that 32% of the participants in our group have not done the liquidity test. And I would just like to share my experience in the company when we did this liquidity stress test, which was also covering one of probably the worst case, worst point of the iceberg where the organization will go through. I was of the view that this is too much pessimistic for our organization. We will never touch that point of the cash and liquidity. But I have seen in the Q3 that we were really close in terms of the cash liquidity challenges to the worst situation which we had identified. And since we had gone through this liquidity test, we were really ready to face that challenge. So a liquidity test is more of a cash forecasting tool, but has been very popular, more than it was more popular with the banking community, but it's quite popular these days because of the uncertain environment we are living with. That's one of the first points. And the second is, as you said about the trapping of the cash. So finance in general is quite sensitive about the trapping of the cash. But in the last 6 to 9 months, the finance community has been running a specific project to see where cash has been trapped. And I can share my experience that when we went through our different subsidiaries in our whole Asia Pacific, we were able to untrap within the span of 1 month. We were able to untrap close to $300,000, which was the bank guarantee already expired with different customers, but the banks and the customer were just holding on it. And this was an effort for 4 weeks, which helped untrap this $300,000. So that's clearly an example of a focus on a specific topic to unearth cash. And the last, as you said, is forecasting process has become much more critical than ever. And the emergence of technology and digitization has been growing a lot. And thanks to COVID, it is boosting up. We have seen many companies and even the banks coming up with their automated treasury management tools to help us with the cash forecast. So here I like to go to Nitin. Nitin, please, can you just keep some insight as to how do you see the cash forecasting tool and the process evolving with the treasury management system and its touch of digitization, which has been the wave in the last couple of years?
Absolutely, Devesh. Thanks for that. And Neeraj, wonderful summary. I think you've hit all the right points when it comes to understanding our cash flow situation. So frankly speaking, I think there is no shortage of tools right now when it comes to mapping your liquidity and actually unlocking your liquidity. So as far as measurement of liquidity is concerned right now, I think there are multitude of BI systems which will help you understand what your options are, and Tableau, Cognos, Hyperion, and so on. I mean, which will help you understand exactly where you are in your position, have a daily cash flow reporting that is possible, not only for yourself, but also for, I guess, every level of the organization. The more interesting tools that are emerging right now are basically in third-party domains where you are able to go and monetize on your receivables. You are able to monetize on your existing properties, your assets, your other, and those are where the new players in fintech, etc.
Hello, Nitin.
There is some disturbance in Nitin's connection.
Can you hear me okay now?
Yeah,
Yeah,
it's okay
it's
now.
Nitin, you're there?
I think again,
All
like,
right, awesome. That, I think I don't know how much of it you call solutions. Third party to. I'm going to try and log in from my phone, guys. Sorry about that.
Okay, maybe we'll.
Maybe you can take it, Devesh, for right now.
Yeah, okay, sure. So maybe I will jump directly to a different topic. So risk management was one of, it's clearly one of the topic which is very close to the finance community. You will see on the slide, there are many risks. The risk can be, each of the risks can be worth more than an hour of the session. But we discussed and brainstormed that financial risk, and more particularly the risk of credit and recovery, is quite relevant in the present context, because we just spoke about cash liquidity, payment delays, and we have seen in our external surveys and internal surveys as well that payment delays are one of the big concerns across the world. So why are we talking about credit risk? So just to link to the context, why we talk about credit risk, and you will see the survey of one of the credit insurance companies that in the last 1 year, we have gone through a big wave of insolvency. And the year 2020 and 21 is expected to see a historically a big increase in the insolvency. Globally, it's 16% in the next year, and expected to be 17% this year. So cumulatively, there'll be an increase of more than 30% insolvency in globally. And Asia Pacific, more particularly, will be most hard hit. Is expected to increase by 24% next year. So this is just this is quite alarming, of course, and this is indicating the level of payment defaults which are expected to happen. So thus, credit risk among the company is quite important. To address the credit risk, this is not new topic to the finance community. I would say this is something which all of us, depending on the industry, depending on our specific organization and the culture, we have a particular governance to address the credit risk. We have categorized the whole process into three parts: people, process, and technology. when we say people means when we have the credit risk, we need to make aware of each layer of the organization, from finance to sales to the management and the board, about credit risk, about the awareness. And to make it work, we have to even put it in their KPIs, link it to their variable pays, and we have to bring it in the controlling structure. So that's about people. On the process side, we go through assessing the financial statements, credit worthiness of the client, getting the reports of the likes of Dun and Bradstreet, and also implementing the credit limit system and using the bank products like letter of credit, bank guarantees, especially in the export market, which I am operating. I can share with you my experience in the whole of South Asia Pacific region, operating in the countries more than probably 10 to 13. The credit worthiness and the letter of credit bank guarantee products are very, very popular. But what has changed actually in the last 1 year? That even the banks, they have been not so keen in issuing the letter of credit for the clients. Assessing the credit worthiness of the clients have become very difficult because the financial statements are not updated. It needs really a very online live update of what's really happening with the customer. We may have a customer portfolio of more than 2 to 300 or 500, depending on the nature of the industry, across the different geographies. So assessing their credit worthiness, getting banking products may be very difficult. And this is why we thought credit insurance to address the credit risk is very, very critical. What is credit insurance? And we were a bit surprised in our survey in our group of ICI Singapore to see that more than half of the participants, they are saying they haven't taken any credit risk credit insurance, and nothing, and it has not changed after COVID as well. So more than 50% of the companies and participants, they don't have credit insurance. So this, of course, is also linked to the nature of industry which they are. For example, we were brainstorming with Neeraj, and they told that they are not on credit at all. They don't have a credit risk because they are mostly running in cash and linked to the credit card of the customers. But the second point can be as well that here I'm leaving the group to really introspect that is it also because of the lack of awareness? Because we need to keep in mind, and I can share my personal experience, that the more credit risk you are willing to take, which can be covered by the credit insurance, the more business you can draw. We have seen that if we are able to well manage the credit risk by our internal policies and culture, and also by the credit insurance, we are really able to boost the business, especially when the geographies are well spread across the whole of Asia. So we are willing to take questions in the question answer session later. And here I'm leaving the group also to introspect why we don't have the credit insurance for a large part of the companies in our group. And here I would go also to Neeraj. Neeraj, what do you think about the credit risk situation and in general the use of credit insurance and the whole the management of credit risk as well?
Yeah, so Devesh, a very good point, and I think certainly we should be exploring credit insurance. But just from our business perspective, we are not a very high margin business. So ours is a volume business where it's a transactional in nature. So if we provide credit, we are taking a huge risk. So we are very cautious in allowing business to be on credit even in pre-COVID scenario as well. And in fact, our credit management practices and acquiring the new business has played to our advantage now in during post-COVID situation or during the COVID situation where, as I said, that we were maintaining a very healthy debt to EBITDA ratios, right? So these are some of the banking covenants and conditions. So, but then when we compare ourselves with our competitors, so they are heavily leveraged, right? So even in the pre-COVID times, and now it has kind of put them into a lot of pressure. So other thing that we are, I think that's an interesting point again, where credit worthiness check, right? So during COVID, we are finding it very difficult to assess because most of the credit rating companies are basing their credit ratings on 2019 audited financials, right? So where COVID started in 2020. So when the commercial guys are coming to us, and first of all, we have kind of implemented a very strict. We are not saying complete no to our salespeople that don't sell on credit, where we have put increased checks and balances in place where approval has to come from the highest level, but then when they're presenting the credit worthiness and these kind of things, to me that doesn't mean anything, because for most of the unlisted companies, the reports are on when you do KYC, etc. These are based on 2019, right? And 2020 reports are not available. So, which is very difficult to assess. And we have seen, and it's all over in the news, right? So a lot of companies and big brands in US, across the world, have gone bankrupt, right? So who has thought of those big names? You can Google it, right? And there are like plenty of big names who have gone down under. So just imagine the situation if we are extending credit, right? But then again, depending on the business, as you said, Devesh, we should certainly look to evaluate the credit insurance and how it can help us in protecting ourselves and also growing the new business.
Sure. And just to add on, one of the practices which we have personally implemented in our companies is, as you rightly said, the likes of Dun & Bradstreet, they are having outdated reports because the 2020 has changed the whole of corporate world in terms of their top line and bottom line and the working capital situation, which is not yet updated. So we have chosen to go back to our customers citing this problem and saying to them that we want to know more about you. But of course, it depends on the nature of the industry. Like we have 50 distributors and it's more an indirect business where we have 50 distributors across Asia Pac, where we identified 15 of them, which covers 75% of business. And we had a one-to-one 2 or 3 hours meeting with each of them. And it was first time where the finance took the lead to understand their business. How are they managing their business? What shape they are in terms of their top line, bottom line, working capital. And this was one way to really assess the credit risk live till the last update with them. So as you rightly said, this is one of the critical challenges we are going through, and it's also linked to the payment default and all the insolvencies as I presented before. So I'll just again go back to Nitin. Nitin, what do you feel about the credit situation and the payment defaults and how the risk management has evolved and has become challenging during these times?
Yeah, absolutely, Devesh. So I'll give you a bit of a perspective from a different industry. I come from the power industry, where we were dealing with extremely large sized contracts, like $300 million would be a small sized contract, right? We would have $400, $500 million exposures as such. So for us, managing the credit and managing the credit risk was a very big deal. And for us, the insurance premiums also were a significant number. So one way that we would actually manage that would be to actually set a fairly high deductible. And that essentially brought down the premiums by a lot. So, and secondly, we were very careful as to which geographies, which customers, which nature of it we were actually going to start to implement that, because not every customer, not every location actually needs to have it. And banks and financial institutions are also very smart. They want to give you credit insurance on the customers that are actually of good credit, and they don't want to give it to you on the others. So, I mean, I think that is one other interesting thing, that you actually learn a little bit more about your customer by, even if you don't want to go for credit insurance, by just applying for it and just learning an additional data point about your own customer, right? So I think the basic idea is that this is a tool that many companies are now using, even to launch consumer-based products where you have the P2P lending and other things, where we are able to monetize your AR. You are able to monetize on just to kind of make sure that your working capital is going up to spec. So it's a good tool, has to be used carefully. I don't think that this is a cure-all and it's going to give you all kind of solutions, because ultimately when it comes time to pay, credit insurance companies do pay, but they do have their own checks and balances. So they will be very careful about any other terms and conditions. If you have not met your service deliveries, if the payment is being withheld because of those reasons, etc. So you will have to be extremely careful of your documentation. And just because you do it, and sometimes we get stuck in actually the process of being able to claim back this amount as such. So we have to be careful, but it's definitely a tool that we can use in a selective. And in our region, if we are going to work in some of the more difficult economies, then I think it may be a tool that is worth exploring.
Sure. Thank you, Nitin. And just to conclude and let the group also know that the cost of credit insurance, which we are speaking, is roughly between 0.5 to 2% at the max, depending on the company who is taking it, the financial credibility and the size of the company, and also the customer portfolio you are having and the geography which you are in. Meaning, if you want to take it in Singapore, it's fairly a bit more easier than Myanmar, which is sometimes a sanctioned country if you want to take a credit insurance. So I will conclude here from the credit insurance point, and I will jump to the topic of business model. So in the beginning, we heard about the survey of the different consultants group, that the finance and the CFO community, they have been really reflecting themselves on the business model and the organizational change. Now, this has been one of the new aspects in the last 1 decade, where as Kala and Neeraj also insisted, that we are not only risk takers, we are not only the guys who are reporting. We start to think about business. We start to drive and being a catalyst. And the business model means we start to think about go-to-market strategy, how we are shaped up in supply chain. Is there some digitization which can be brought about? So I would here take to Nitin that how a business model has to be challenged, and how finance can really play as a business partner a role to get into it and redefine it along with the board and the management.
Absolutely. So I think this is going back to, I think, Kala's earlier point. This is where the CFO actually starts to become strategic, right? We have to be very careful. A business model is something that you don't want to tweak if it is actually working for you. It's a very difficult thing to tweak. You have to not only tweak the model, but you have to make sure that you are getting the support of your entire team to back that model. Changing it is one thing, getting it to stick is another. Your customers have to accept it, your suppliers have to accept it, everybody around you has to accept that particular model. And you may very well cause a bigger problem if you actually don't implement it correctly, right? So yeah, if you don't mind going back to the earlier one, Devesh. Yeah, so see, these are the broad areas. I mean, when we try to kind of capture what exactly are we talking about, there are 3 very big areas. One is forward-looking, looking in your front end, looking at your customer. What is your go-to-market strategy? How were you going to market in the past? And just 1 or 2 slides later, we'll actually have a specific case study that we picked up. So all this kind of comes together a little bit more. So essentially, looking at your customers, who is giving you the most amount of revenue? Is that revenue at risk, right? You're trying to understand what is the impact of your customers and their customers. What are the downstream impacts, not only on your customers, but their customers as well. If you are in a B2B kind of a business, you're also trying to assess the impact of your customers. And then you're trying to segment them, you're trying to support them in a different way. You're also being very, very careful about your commercial offering. Can you essentially help your customers by offering them some kind of deferred payments, making your offering bite size, making it smaller ticket size so that it's easier for them to purchase, being a little bit more flexible as finance. What worked 6 months ago is not going to work right now. how can we be taking the business hat a little bit? We want to protect the business, but at the same time, we want to also make sure that we are able to help our business by being flexible in our commercial offering. So this is a difficult time. I mean, customers also will remember what we do with them at this time. If we are going to withhold all of our credit, if we are going to withhold all of our supplies, and we behave in a very firm way with them, obviously they are going to remember that when the times were tough, you did not support us. And it's the same thing on your vendor side, on the supply chain side. How can we help our vendors? Not only us, can you basically accept one of their letter of credits with extended payment terms? That allows them a little bit of a longer runway. They are able to get cash faster from you. And they are able to, if you have a better credit score than your supplier, sometimes that is a tool that we can leverage, right? We also have to try and figure out what is it that we have to do with respect to our supply chain risks. Are they fully mapped? Are they understood? Is there a chance that you are going to you're going to go ahead and find out that you want to supply something, but your supplier is not able to supply you? We have to take care of not only our customers, our supplier at the same time. Is there a problem that you basically order something and it's going to get stuck in border restrictions right now, mobility restrictions? How do you factor all of that in? How much of your model can you switch from, let's say, air travel to sea travel or sea travel to air travel, depending on what actually can work for you? And then lastly, you want to look at everything that you have in-house. So in terms of your overall cost base, I think we've spoken about that earlier. This is one of the critical things, but we have to take it with because you don't want to reduce your cost base significantly and find out that when the market recovers, you are not able to come back immediately. Your competitors are already ahead of you. You don't want to be too far behind your competition. You don't want to be too ahead of your competition. You want to be exactly positioned at the right place, that when the market is starting to recover, you have the right cost base to take advantage of that as well. Legal entities, etc. I think those simplification aspects will have to be done at all points of time. And digital transformation, we'll talk about that later. Right. So looking into your rooftop consolidation, looking into debt restructuring, looking into what you can do with respect to your ERPs. If you have many ERPs, you're trying to simplify that. Seeing which of your vendors you can switch over into a SaaS model. If you are the vendor, how you can switch your offering into a SaaS model. How you can be flexible in terms of things like your termination clauses and things like that. I mean, customers remember that. That's where the whole model aspect comes in. But go ahead to the next slide, Divish. Right. So over here, I think we will see that it's actually something that you would expect. And what was surprising is that even though we had most of our participants, if you think back, they were from the small and the medium enterprises, still we are seeing that not the bulk of them are able to change their business model. And it's not something that you would, I was expecting to see a slightly more percentage of people being able to change their model, but it's maybe they are evaluating it, and time is it's not this perfect time to maybe change it immediately. They are changing, as you can see, on their commercial strategies. I think that is the easier fix. So the bullet, the pie chart that we have at the bottom, where you see almost 60% plus are actually changing their commercial strategies. That's the easier fix. Drop your price, offer different credit terms, or change the way that you're packaging your products. All that is essentially, starting to, that's the easier thing to fix. And it's also interesting to see that 12% of our not everybody has a downside because of COVID. Some businesses are actually seeing the upside. And I think for the others, they definitely have to find a way to kind of weather through this. All right, now let's get to the case study, right? So this is just as an example. I mean, we took, let me just give a little bit of a story about this. So this is a company that is essentially, I'm currently supporting them as their CFO. It's in the online education space, and pre-COVID, they were 100% offline. They didn't have a lot of online presence. They were 100% offline. The only model that they had were going to colleges, doing training courses for them, very limited online and very limited geography as well, only operating in South India. And you have to basically look at their model, very basic commercial models, just straightforward transactional model, nothing unique about the way that they were doing it. And they were able to keep doing their work. Now, COVID hit. Suddenly, universities are not inviting anybody over to do any kind of courses for them, right? Now, whatever turnover they had was at the risk of essentially disappearing. So the company essentially went and tweaked their business model, and they completely brought in a new platform, Smart Interns, and they started to make that into a online B2C kind of a model. And that actually took off extremely well, because right now they just caught the wave at the right time when everybody is now starting to look into online education, online learning, etc. And instead of being just a pure offline platform, they became an online platform, and they started doing a lot of, and not only were they now starting to work with the customers that they knew, they actually expanded their reach massively. So previously they were working with about 300 universities. Now we started to see students from more than 1,000 universities coming onto the platform. So it's just a way that you start to see where because of COVID, you are actually able to see a opportunity where you can turn your threats into opportunities by doing certain. And because now the platform was online, now they could actually not only limit themselves to a single geography, they started to spread out. They started to basically go to different geographies and started to kind of work through that as such. Their commercial model also started to evolve. Instead of just having a transactional model where you told somebody, hey, just pay me if you do this particular course, they started to charge them based on transactional. Plus, they also brought in a subscription model, so that they are now adjusting more to the way that customers are looking to kind of deal with them, right? So the whole idea of this is that you, as a finance person, you have the mandate actually to look carefully at your business model, to look at what are your opportunities. Even with this, there is something that you could not do before that you will be able to do right now, and to make suggestions on that, and to see if you can influence your leadership into driving your business into a slightly different direction. Take that plunge that is outside your comfort zone, right? I think so that is essentially where we have the opportunity as leaders to see and help them understand both sides of it. What is your risk? What is your opportunity? And then, you kind of, you take the leap. Now, this is one example, which is a model that could pivot, right? I'll maybe turn it over to Neeraj. I mean, for his thoughts. I mean, Neeraj, for your model, which was basically in the travel industry, I know it is not the easiest thing to maybe pivot. So how is the travel industry side of it? How is that business model? How do you feel about that?
Yeah, Nitin, so this is very relevant in our context as well, because we are unfortunately the industry which is hardest hit by this pandemic. Now, what we are not looking to change the business model drastically, but what we are looking to do is one is accelerating our plans to reduce the operational cost, right? So because in our business, operational cost is the key cost where we need to get a good handle around, and that is the manpower, right, or the workforce that we have. So one thing that we have, what we are doing is to accelerate our plan to have online booking tools or the self-booking tools that we can introduce in various Asia Pacific markets. Now, the nature of markets is very different in this region, where we need to be having a self-booking tool which can cater to the requirements of respective markets, right? So because we have all sorts of airlines, low-cost carriers, full-service carriers, and there are various other suppliers, and then their content is not easily available in the normal tools, right? So this is one of the things that we are looking to introduce. And then second is on the flexible workforce management solutions, right? So where we're looking to scale up or scale down the resourcing in line with the demand. Now, very interesting, right? So we have never faced this before, like when we are dealing with markets in Japan or in China, where these are highly regulated, labor protected markets, and where 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 either you have to pay a high cost to reduce your workforce, or you're inviting a lawsuits or all those sorts of legal actions, right? So so we are treading this very carefully, that how we can build a very flexible workforce management solution with a good mix of outsourcing solution available. And then there is a lot of this gig economy which is coming up, right? So where how we can make it workforce as flexible as possible, right? So even we are going beyond traditional traditional call centers, or where you can look to have your work outsourced, but then we are looking at even beyond that, right? So where you can even hire someone for very short duration of time, and you can hire or fire as you like without getting into a lot of costs. So this is something that we are looking at. Then in terms of our offering, right? So one of the things that we are noticing due to COVID, what has happened is we are not getting the transactions, obviously, like borders are closed, international, but what we are getting is a lot of inquiries. So we are getting a lot of contacts, because all of us, right? So all of us in our individual capacity are confused, because all these regulations and is changing, right? So countries are announcing we are opening green lanes, but when you start digging deep into it, they are not truly green lanes. There are quarantine requirements. There is a test requirement. So customers are making a lot of inquiries, right? And then if we have to service those, then we need to put a manpower, right? But our contracts were not geared towards having the charging for contacts, right? So now we are engaging our customers and then looking at their requirement, and then renegotiating as to how we can make it contact based. And then secondly, like as you're saying, on the subscription fee model or the management fee model, we have some of the customer base that is on those models, but now we are engaging our customers, and then assessing their needs, and also looking at changing from transaction fee model to a subscription or a management fee model as per their requirements. So these are some of the actions that we are taking from business model change or from the commercial pricing strategies.
Thank you. Thanks, Neeraj and Nitin. I think one of the key takeaways from this whole discussion of business model, and to remind our group, is that generally we, finance community is not getting into this discussion of business model. But this is really a new aspect we are, experiencing in the last 1 decade. And as Nitin said, finance has the mandate to go into the organizational model, including supply chain, commercial offerings, pricing, the way we approach our customers as well. So we really need to think out of the box, and we really need to take this plunge to make suggestions to convince the board. And then this is really confirming the strategic role of the finance and the CFO. And lastly, what Neeraj said, we don't need to necessarily change the model. We really need to see if it's making sense considering a long-term or a mid-term sustainability or not. So I will conclude the business model aspect, and then I will go to one of the slides, which is more based on, again, introspection and the survey from the group regarding the work from home and the virtualization. This has been one of the interesting discussion in the last few months and the quarters among not only the finance community, but all the community in general, that how the world will look like. And we thought to take down the response and reflection of our group. You will see here that one of the interesting and positive thought is that first, the workforce reduction in our group is quite less. It's more than less than 10% or no reduction. So this indicates probably that we are lucky to have our group in the nature of industry, which is probably not the hard hit. Regarding work from home, it seems more than 50% are satisfied or partially satisfied regarding the efficiency in the last 6 months or 9 months for the work from home. And in the future also, most of them, which is 84%, expect some level of virtualization. So this is really a strong signal, which has been quite similar in the external surveys and what has been coming from the CEOs of the large companies as well for the finance team. Now, I personally know a lot of companies who have already taken some of the decisions to, make part of their team permanently working from home. So I will now hand it over to Nitin and Neeraj of how they really see this point and reflect on this, their point of view.
Absolutely. Let me take this one, Devish. So I feel that, and I think for the audience as such, guys, this is a good time for you to actually put in any questions that you have, because I think we have a few more minutes left, maybe 10, 20 minutes left. So, it'll be good to kind of get your thoughts as well. We don't want to be the ones only speaking as such. And I think we really love what you guys have done in terms of the survey as such. So very, very simply put, I think I feel that maybe the data that we have got back for Singapore might have been slightly skewed because the government here has done a lot, right? It's not that we are seeing a situation where they have led, so they are doing job support schemes, grants, all kind of support aspects, etc., which have given a certain amount of confidence to the companies, which may have resulted in not everybody seeing that kind of an impact, I think, on the workforce side. But that said, I think it is really, really important for our finance team and our finance community to do a few things. I feel that they should very well try to understand that the finance roles, especially any of the roles which are of a of a non-analytical basis, and even some of them which are of analytical basis, there are tons of tools out there which are starting to come in on the AP side, on the AR side, on the BI side, on all kind of systems as such, which are trying to basically work on automation as such. So we as finance people have to step up our game, and we have to really try and figure out how we can stay ahead of the curve when it comes to being digitization ready, being future ready, and honestly being virtualization ready. That we should be able to work in all kind of situations, and we should be able to bring the real value of us, which is not essentially passing entries all the time, but it is really in being the business partner and driving good decisions with our business leaders as such. So how can we take the information that is available? How can we try to help them assess the risk? How can we try to assess all of that? If we are able to do all of that, I think everything that we see with respect to the finance workforce, we will bring the right amount of value to the business. And that is essentially what I guess some of our business leaders will start to, they will start to depend on us for. Right, Neeraj, your thoughts?
Yeah, Nitin, very well said. I think digitization and automation is completely disrupting, and I think that has helped to a great extent. I think when it all started in March and April, when all these lockdowns started, then we immediately responded, right? So overnight, some of the things that we were trying for so many years, we saw that immediately we made them possible, right? So where even if we are not 100% ready, we have kind of ensuring that our business is continuing, and then we are addressing. But one of the things which I think interesting, and that's an experience, and I'm sure that most of us are facing as well or experiencing, where when you're collaborating and dealing with various markets, right? So one of the observation is like in Singapore and Hong Kong, where we don't have dedicated home offices, right? So we don't have for everyone where there is a proper working space. So what we are finding, you are having conference calls or collaboration, and you are hearing that multiple conference calls going on because both the partners or in the home, people are working, right? And then their kids are studying. So that's practically I have faced and observed in markets like Hong Kong and in Singapore. Then what I have found is like it worked perfectly as a market like Australia, right? So where there are spaces and there are work from home, kind of a very mature kind of market. Japan, like it's a highly manual where people want to be in office, and may not be the reflection across all the industries and companies, but at least in our setup in Japan, we found that it's a highly manual kind of a setup, and they would like to be very detailed and in their approach. So I think what would come out of this, and that is also based on my discussions with I think finance or non-finance people as well, that we are getting into the territory of work from home fatigue, right? So where we would welcome some bit of flexibility in terms of looking at an opportunity to go to office, collaborate, thresh out whatever is required from whether it is a project that you're driving, whether you are having some sort of a strategy discussion, etc. So and similar, I'm hearing from our commercial colleagues as well, where they are saying that for initial discussions, video calls, Zoom calls are all fine, but to conclude the deal and finally handshake, you need that kind of a personal touch, right? So they're getting a lot of interest from virtual, but I think the general message which I'm hearing, experiencing is that some bit of a mix is required. Virtualization and then work from office, that flexibility. Over to you, Devesh.
Thank you, Neeraj. So here, I think we are done with our session. I would just like to conclude it before going to the question and answer, if any, on a part of the group, that we covered roughly 3 to 4 topics. Thanks to you, Neeraj and Nitin, to share your practical insight, starting with the cash and the liquidity, where we clearly saw liquidity stress test is one of the key drivers, and the cash forecasting tool with the digitization touch has been quite popular in the last few quarters of this year, which was already under the process, but it has really speeded up in the last few quarters because of the COVID situation. And untrapping cash and engagement with the customers and the suppliers is one of the key to the whole process of handling the liquidity and the cash crisis. And coming back to the credit insurance, I could understand there are still a lot of brainstorming among the group, but that's something, if we have any questions, we can take up that now, or we are happy to take up the questions even after the session in terms of the brainstorm of what's really the reflection of the group in general about this topic. And about the business model, I think the key takeaway, as I said, is that we really need to change this. We are changing, the finance community is changing the perception of finance now being the strategist, catalyst, and the driver of the business, along with the board and the CEO as well. And getting into the business model at this time is the right opportunity for finance to really go out of the box, not only talking about the numbers and the risk compliances, but talking about the business in general. And lastly, we talked about the workflows and digitization. So the key takeaway is that still there are a lot of thoughts and reflections among the group which has to get mature. One thought, of course, is that a high level of work from home and virtualization has been successful in the past. But as Neeraj said rightly, that and that's exactly what was what is the feedback from my team and my customers, that the final deal will happen only when we had a handshake and we will have a dinner or a physical meeting. So at the end, we have to remain in our all digitization and virtualization dreams or ambition, if I may say, that we are human beings and we like to work together. We like to meet each other. So with that, I will see maybe if Kala, if there are any questions, we would like Neeraj and Nitin to take up.
Yes, I think there is no questions, but people have been sharing their perspectives, and one of the things I've seen is most on the credit insurance, and the other one is liquidity, and on the last slide. So members, are there any questions you can ask to Neeraj, Nitin, or Devish? Any questions?
Okay, Kala, can I join this?
Yes.
Okay, this is towards the cash flow management thing. Mr. Pai was talking about how Infosys had managed their cash flow. Not just for this situation, but they always had a policy to have almost like 1 years of cash need in their business. Which was like a good practice. So good practices have to continue whether it is pandemic or no pandemic. Okay. So and secondly, the moment cash flow means people immediately think of only curtailing the creditors and collecting from the receivables and whatever. Actually, he also mentioned, Mr. Pai also mentioned, which I like very much because that has been my one of my key aspects, which I so as long as you don't delay your vendor payments, that is the best way to keep the chain proper, because the chain breaks when someone tries to conserve cash by pulling creditors, okay, and by paying the receivables. And as such, this is a chain effect. Immediately one man's so immediately everybody withdraws and says, oh, I cannot pay. So this is one. The second is, if you see majority of the trading or manufacturing organizations have a lot of money locked up in inventory. The inventory is something which it becomes like a wishful thinking sort of, how much, because everybody has some buffer. Salespeople give a hockey stick forecast. The traditional hockey stick forecast is the actual sales for the past few months must be coming down. But when you ask for the next year's budget, they give such a phenomenal, like, Nike sort of a stroke, which will kick everybody, and then say, oh, we need to keep the production on, so we need to buy this stock that and all. And as such, there's a lot of money locked in there. People have to be very sensitive, and as I mentioned in my note, that finance department cannot be just a governance team anymore. They have to get into the business, and work towards supporting operations, supporting marketing in every aspect. And secondly, if it does not pain somebody, nobody is going to go the extra mile. For example, marketing people in one company, I found that they were not pushing for receivables because the sales team were getting their commissions irrespective of whether it was collected on time or not. So I had to link their sales incentive and their KPI and their increment to all this, and to make people impact. And coming to operations, waste management, inventory management, obsolescence management. So a lot of things which finance can play to create the awareness. We are all walking over waste in every aspect of organization, whether it is a trading organization or even a finance organization, anything. There's a lot of waste we are walking around. So those are the few things which I thought, I wanted to say. But while making the presentation, most people talked about creditors and receivables, but not about inventory. Why? That was the question which I had to, make a point here. That is something, and a lot of expense management waste. Why? And lastly, about this work from home, we are all working from home, and if you sincerely ask people, particularly IT people and all, they hate work from home. They hate, because they are unable until 11 o'clock in the night. People have to be on calls. Either America will be calling you, or Australia will be waking you up. So and it is such a pain. And if you ask me the other side of things, when people come into an organization, they meet face to face, their relationship is much better than work from home and then send email, reminder, chasing this and that. This will only create hate.
Yep.
And we cannot overdo anything. We cannot come and sit in the office and then waste time, or we can go the other extreme. We need a balance. What is the right balance? Each organization has to define their own. These are the points which I had in my mind. Thank you for your time.
Thank you, Krishna, for your comments. And if there are no questions, maybe I'd like to hand over to Kala and Sanjay.
Thank you. I think with this we come to the end of the session. Sanjay.
Yeah.
So I invite Sanjay to deliver the thank you message.
Yeah. Thank you, Kala. On behalf of ICI Singapore chapter, I would like to propose a heartfelt thanks to our speaker, CA Nitin Jain and CA Neeraj Singhal, for gracing today's webinar. Very much for your very interesting and thought-provoking information, and also for sharing your experience, learning, and making this knowledge series session more interesting and meaningful. On behalf of ICI Singapore chapter, we would be happy to share certificate of appreciation. I will just share it on the screen. Please allow me to share my screen. So Nitin, this is the certificate of appreciation for you, and we will email you the digital copy very soon. For you, Neeraj Singhal, for your valuable thought-provoking webinar today.
Thank you.
Thank
you so much. Thank you so much for this.
Yeah. And thanks to our moderator, star of today's session, Mr. Devesh Singhania, for engaging and thoughtful question answer session. And a special thanks to all our members who are our true strength, and viewers who joined from overseas for their continuous support and the contribution. We wish you all a lot of success and happiness. Over to you, Kala, for any further announcement.
Thank you. Devish will be sharing a certificate for you also. Maybe it's not shared in the screen. And thanks.
Sure.
Thanks.
Thank you very much.
Thank you. And just we want to tell you that this knowledge series we started this term, this is exclusively by members. So that's one fact which we are very proud of, because all the speakers are coming from our members, and we are looking forward the participation from our members. Keep supporting us. And thanks once again, Neeraj, Nitin, and Devesh for all your efforts, which I've been seeing in the last 1 month, which we all been putting efforts and to bring this into every event. As I said, a lot of effort goes behind, and people see the final form. So thanks to all of you three for putting your efforts to bring this today in the final form. Very insightful presentation. Once again, thank you. And dear members, our next event is on November 9th. Again, something in line with this, we are taking forward the intention is reporting challenges. So it's on the IFRS. It's not going to be purely IFRS, because we are going to make it very interesting for the members. The next session is on November 9th, and we will soon share the details in the WhatsApp and the email. Thank you. Thank you all.
Perfect.
Thank you,
all.
everyone. Have a nice day.
Thank you. Thank you.
Bye.
Bye-bye.
And thanks to Pratima.
Thanks, Pratima. Thanks, Sanjay.
Pratima, Nishan, Sanjay, everyone. And I think Vimal is there from Melbourne chapter. I'm seeing you. Hi, Vimal. Thanks for sharing, joining us today.